What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, NIO, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So we are less than a week away from the NIO earning call, and as a reminder, that will be this coming Thursday, March 24th, after market close. It's also worth noting that the channel has reached a new milestone, though unofficial. We have hit 250 subscribers, putting us halfway to unlocking the next crypto or NFT giveaway, and a quarter of the way to the next official YouTube milestone of 1,000 subscribers. Thanks to everyone again who has subscribed to date. I do this all by myself, and your support makes it all worth it. Again, thank you. Now, let's talk about NIO. The market action this week probably felt like a sucker punch to the gut, and if you sold, you're probably kicking yourself right about now. If you held, in part due to the discussion we had last week, well done. And if you walked into the fire and bought, well then, congratulations to you. I'll use our time today to provide a bit of insight into NIO's market action this week, touch on a new rating and price target NIO received that you may have missed, and go over what I reasonably expect NIO covers during the earning call, plus where the stock could go as a result. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and a thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Well then, NIO this week on Tuesday put in a new 52-week low of $13.01. Last week, when we spoke, I told you that at $16.07, we were near bottom and gave you a few reasons why I believed we would likely go lower near term. If you missed last week's video, you can check it out here. As I said before, it wasn't just NIO, right? But every Chinese company stock listed in the US has seen a severe decline recently. That said, Tuesday's selling pressure was intense enough to cause many, including NIO, to hit their lowest point in over a year. That, as a result, was finally enough to prompt China's State Council Financial Stability and Development Committee, that's a mouthful, but basically it's the FSDC, to issue the following statement Tuesday evening US time, and I quote, "Chinese and US regulators have maintained good communications over regulations of US-listed Chinese companies, made positive progress, and are working to form concrete cooperation proposals." They also added, "China welcomes long-term institutional investors to increase their shareholdings, and all parties need to work together to maintain the stable development of the capital markets." End of quote. This was obviously a nod to US institutional investors who, as suspected, had gone on a heavy selling spree of Chinese equities. Now, interestingly enough, not long after that, the following statement from Zhang Ming were released. And if you're wondering who he is the deputy director of the National Institution for Finance and Development in China. In his statement, he had offered some insight into why he believed that it was finally time for the Chinese government to step in to stabilize and avoid further downside to Chinese US listed stocks. And I quote, "The core reason is not the overvaluation of Chinese listed companies, but the combined blow of external geopolitical shock, China-US game playing, and the malicious shorting by international investors." He then continues and says, "Against a backdrop of conflict between Russia and Ukraine, shorting Chinese stocks has become a politically correct option for some Wall Street investors." End of quote. And that right there validates what I had discussed with you last Sunday. I'm not going to sit here and say that I have a crystal ball. However, getting a solid understanding of how the various forces within the macro backdrop could impact the companies you're invested in my opinion, can help you gain a solid perspective of where the stock price will go next directionally. Now, the thing to realize is that the signal by the FSDC serves two purposes. Number one, it helps ease growing delisting fears if the US-China regulatory relationship was deteriorating. And two, it shows that despite the current geopolitical issues between Russia and Ukraine, the US and China are still on good terms, which should in turn address the various rumors that sanctions may be extended to China. With those rumors put to rest, at least for now, shorting of Chinese stocks and NIO eased. And that would be the reason why you saw a nice pop here at the start of trading Wednesday. Now, a few additional things happened on Wednesday that helped carry that momentum forward for a weekly gain of just over 30%, accounting for the aftermarket actions. First and foremost was the long-awaited press conference by Fed Chairman Jay Powell. We now have confirmation of a locked-in initial rate hike of 0.25 percentage point. Total number of planned increase is 7, with a terminal Fed funds rate of 1.9% for 2022. The Fed balance sheet reduction was also communicated. And why does that matter, you ask? Well, it's all about clarity for Wall Street investors for cash to be put to work in a meaningful way. You gotta remember that. The point here is that those investors While they can now complete their final portfolio rebalance as we head into Q2, and a portion of that cash that had been sitting on the sideline up until now from all the selling action, that cash made its way back into the market and NIO also benefited from it. The second reason, which is more specific to NIO, is the latest rating they received from Chinese brokerage firm Northwest Securities. They initiated coverage on NIO with a buy rating and a $25.60 price target over the next 6 months. The reason, and I quote, "We see the current transition phase of NIO product cycle and the performance of the new ET5, ET7, and ES7 portfolio as a decisive factor for its new cycle." End of quote. The key here is that all 3 models are expected to launch this year, and they go on to add that basically even though the company is still in the red, it has a strong growth profile. This now then brings us to what I expect we'll hear during the earnings call. We already know that NIO delivered 25,034 EVs in Q4, which is a new record high quarterly delivery for them. Total deliveries for 2021 came in at 91,429 EVs, which translates to a 109.1% year-over-year growth, which is pretty cool. So with that, I would expect that revenue comes in line with the guidance they had given, and maybe even then on the high end of that. I would say though that I still don't expect NIO to surprise us by being profitable at the close of 2021. I just don't see positive cash flow until sometimes in 2023. Wall Street's consensus places NIO at a loss within the range of 14 to 21 cents per share. So as long as they land somewhere in there, they will meet expectations. I would also expect that we hear more details on how their charging network is expanding. But more importantly, I'll be looking to hear on how they're doing launching sales in Germany, the Netherlands, Sweden, and Denmark. Those are the 4 planned countries for 2022. Ultimately though, last week I shared with you that NIO had 13 analyst ratings from Wall Street, and that would be 11 buys and 2 holds, with a median price target of $51.14. Now, it's definitely going to be interesting to see how those get re-rated, especially now that the 2 biggest macro factors have been addressed. Again, as a reminder, that's the geopolitical/regulatory fears on one end, and the other is the clarity on the Fed's fund rate hiking plan. Now, if I had to make a prediction, because those are always fun, I would say that the overall ratings are probably going to remain the same, even though I expect the median price target to come down a little bit. I would also add that we have shifted into a sell the rumor, buy the news type environment, meaning that the market sells off or trades sideways during speculative times like right now, and then rallies once the real news drops. Essentially, that's how this week played out, but pretty much opposite of how we have been performing in 2020 and certainly in 2021. So specifically into next week, which is a dangerous game to play, but whatever, let's go for it. I'm going to say that we're going to hold steady into the earnings call, assuming that they at least meet Wall Street expectations, which I expect. We should see sustained upward momentum. Now, to be clear, I'm not saying that we'll moon and we'll never look back. I'm simply saying that in my opinion, the bottom is now in for NIO, and we are now on a path to recovery. It's still going to be a bumpy road, and the real test will be how NIO gets re-rated coming out of the earnings call. The last thing I will say is this: calling for a bottom is always a tough flip of the coin type deal, right? That said, short of something totally unexpected coming out of left field, I'm willing to say that again, the bottom for NIO is in. The more interesting thing here for me is that if it plays out the way I think it will, this aligns quite nicely with the playbook I gave you at the start of the year. So we'll see how it all shakes out. But that's all the time I have for today, so I'll leave it here. Don't forget to drop the video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. As a reminder, I post every Sunday, and as time allows, I target one additional in-week video for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.